Begin. Welcome all. Welcome to Financial Fitness Program. My name is Samir Bapat, and today we are going to learn how to earn money using moving averages. It's a very powerful technique, very simple, very powerful. What I'm going to share today is the basics of moving average and how to earn money using moving average. Many people use it only this for earning money. They have fine-tuned basis their own experience, the moving average. But today I'm going to teach you the basic, right? So the foundation starting point for earning from moving average. So how many of you are here to learn and use it and earn money? If you are here to learn, use it and earn money, just type yes or why or I. Just let me know I am addressing to the right audience. I have the audience who are really wanting to earn money. You have a strong desire to earn money. That is the only requirement here. Okay, great. So many. Great. Fantastic. So let's learn moving average. So just a basic question. The only qualification you should have to earn money using moving averages, you should be at least, when the T is the averages, 8th, 9th, 8th, 8th standard. Okay, I'll ask the question and let me know when you learned the averages. Okay, so question for everyone. Just tell me what is the average of following numbers: 8, 7, 12, and 5. If I am asking you a question, what is the average of following numbers? Find out the average of following numbers and type your answer. What is the average of following numbers? Find out the average and type your answers. Don't look at other people's answer. Acha, everyone is typing 8, let me type 8. Okay, so I think this is some 8, 9 standard math, and I'm expecting at least to understand what is moving average. It is not even necessary to know average. Just to understand what is moving average, you should be at least 8 standard pass. Okay, if you have forgotten, it is okay. Great. So everyone answered correctly. Congratulations. So just for people who are thinking of what is the average, so nothing, average is adding the numbers, and if there were 4 numbers, dividing the total by 4, 32 by 4 equal to 8. So that is the answer. Congratulations, everyone passed today. Great. So let's go ahead. Now, what is a moving average? What is a moving average? Again, moving average is a technical indicator. Technical indicator means what? Technical indicators means whatever is dealing with the price action of the stock. What is price action? Every day the stock market opens. The stock market opens at 9:15. It starts with some price of trading. People buy, sell at that price. It goes up, it goes down. At 3:30, the stock market closes for the day. It's a good job, right? 9:15 to 3:30 only. Not like start from 9 and there is no end, and boss will call for a meeting and then meeting, follow up, PPT, nothing. 9:15 start, 3:15 end. Whether you like it or not, the market will close. Okay, I'm not trying to sell the stock market, but that is how stock market. So there is a price movement, right? Throughout the day in the stock market, there's a price movement, and market closes at 3:30. This is called price action. Every day market will open, every working day market will open, it will close, open, close, open, close. This is called price action. And basis this price action, we do an analysis and we are able to earn money. That is called technical analysis. In technical analysis, moving average is one of the powerful tools which we are going to learn. How that average, moving average is plotted on the graph, I'll show you on the graph, so it will be visually also very clear. I'm just presenting it in the words right now. So it is an average of 10 days closing value. So let's say 10 days moving average, if I want to find out, then starting today, let's say today is Thursday, starting today, every day 3:30, what was the closing price of a particular share? I will take the values of that, add them up, divide it by 10. Whatever comes up is the average of 10 days of closing value. I will just remember and plot the graph on that. So along with the closing value of the price every day on the graph, on the chart, we will also plot these points of moving average. Okay. Then why we need this moving average? See, there has to be purpose, right? Moving average and all. How many of you who are trading, or maybe who are beginner, do you think there is any third question out of these three questions whether you are in stock market? Of course, fourth question is there, which share to buy. But let's say if you have answer to that question, that okay, even if you don't have answer to that question, even if you find one basic good decent share which is growing 20% year over year, if you have that share in mind, then how many of you have these three questions in mind? When to buy that share? I am already invested. Should I stay invested? And when to come out of the share when it is going to fall or it is likely to move sideways and better to come out. How many of you think, how many of you agree, type yes, that there are only three questions which everyone in stock market needs to answer. When to buy a share? Should I stay invested? When to sell that share? How many of you agree, type yes? Correct? Only three questions, simple. So what happened was, technical analysis is, we can say, though technical analysis is almost 400 years old, in the Western world, technical analysis got importance somewhere around 70s. In 1970s, Western world started using technical analysis, and the technical analysis, the first indicator, I presume, was the moving average. When they started using moving average, so they found it to be very useful. So now what is the theory? I will show on the picture. I'm just taking you through the theory. Theory is, as long as the current price is above the moving average, it is in uptrend. If the price is below that, it is in downtrend. What is uptrend? Uptrend means price will, it has a more likelihood to keep on going up. So if we have bought the share, we want to be in the share for as long as it is above the moving average. If it goes below the moving average, we should be out of it. As simple as this. So the theory, the concept, the requirement was, if it is above moving average, stay invested. If it is below moving average, don't invest. As long as it is below moving average, don't invest. I'll show you the trading plan also. So coming to moving averages, is commonly used moving averages are 10-day moving average, 20-day. What is 20-day? Nothing but 20-day closing price added up, divided by 20, whatever value comes, that is plotted on the graph. 20-day moving average, 50-day moving average, 200-day moving average. Now, why 10-day? 10-day is how many working days in a week? Like how many days normally the stock market will be there operating in a week? Any idea? 5. So 2 weeks is a fortnight. Yes. So 10 days moving average usually used to cover for a fortnight. 50. What is the trend for last 2 weeks? So if someone is saying what is the trend for last 2 weeks, so they will use 10 days moving average. If someone wants to use, ask me a question, okay, Samir, what is the trend, whether the stock is going up and likely to go up? I'll say, okay, you for last 1 month, use 20-day moving average. A quarter, because companies report their profit and loss every quarter. So a quarter is 50 days moving average is used to see how the stock is as basis the quarterly results. As for a long-term investors, they use 200-day moving average for a year. Now, fun fact. Okay, now the interesting fact. It is understood, chalo, fortnightly, 2 weeks, 10 days moving average is understood. Why 20? Right, there are 4 weeks, correct? More or less, if you see it, in 30 days, there are mostly 4 weeks, 4 to 5 weeks in a month, 30 days month, 31 days month, there are 4 to 5, 4 weekends. If you remove 8 days of the weekend, still it comes to 22 days, correct? Then why we are taking 20 days? Why they started with 20 days, correct? That is question number 1. And you got the question. There are 31 days in the month. If you remove 4 weekends, which is Saturday, Sunday, 8 days are gone. 31 minus 8 or 30 minus 8, still we have 22 days. Working days in a month. Why we don't use 22-day moving average? Why they use 20 days moving average? That is question number 1. In a quarter, there are 3 months. So that is 90 days. 90 days minus, let's say, 24 days of your weekend and some 2-3 days holiday. 30 days also gone. Still, you will have 60 working days in a quarter. Why they are using 50, right? This is one question, right? In a year, 365 days, you have 255 working days. Then why they are using 200 days moving average? Why it is that 10, 20, 50 and 200 is being used, and why not 22, 60, 252-day moving average? Right? Logically, I am saying logically, why they are using only 10, 20, 50? How many of you got my point? Can I have yes from all of you if you are getting my point? What I am trying to say. My question is most prevalent moving day average. You will listen is 10-day, 20, 50, 200, right? But I showed you the calculation, right? Mathematically, it should be 10, 22, 60, and 250, right? So fantastically answered by many. Like I can see Sachin and Amrish saying simplicity. See, we have to remember when the technical analysis was started, right? When the technical analysis was started, those times they did not had computers. 70s, the computers were not there. They had to plot the graph on a paper. They had to take a paper and plot the graph. That is point number 1. Second, fantastic. I'm getting all right answer. Fantastic answers. So they had to plot it by hand on a chart paper, like we used to do in childhood, right? They will keep a chart and they'll plot by hand. Second thing, what they had to do is there were no calculators. Even in my childhood, the Casio calculators came that time. So that was a very advanced thing, and very few kids had those calculators. We used to calculate by hand only. So it is always convenient to divide a sum by 10 rather than by 12, 22 like that. So it was a matter of convenience. That's why they said, okay, 10 roughly it's okay. ठीक है, चलेगा. 20 chalega, more or less chalega, it is okay. And since then, for a matter of convenience and for a matter of simplicity, they have been using 10, 20, 50 and 200. And it is so prevalent that even though we have accurate computers, everything, majority of the traders are still looking at 50 and 200 and 10, 20, and it's still relevant. You want to tweak, you can tweak it as per the logic what I had said. Okay, so this is the history behind 10, 20, 50 and 200-day moving averages. So this is all theory. All my dear, kya theory padha raha hai? What theory? This is the end of the theory. Last slide where I'm teaching the theory, and then we'll straight away jump to the practicals. Okay, where we'll know how to earn money. Simple strategy: buy when it crosses above moving average, sell when it crosses below moving average. Okay. So that is the simplest strategy what you can have with the moving average. Those who want to take snapshot, they can take. Otherwise, you can just remember buy when it crosses above, sell when it closes below. So let's jump to the chart straight away. Those who are not very well versed with TradingView, please open a free account in TradingView. My video is there on YouTube, how to use TradingView. Please go through that so that you will be able to use it. By fortune, with the development of technology, these charts are freely available by TradingView for us. So make use of it. Okay. And how to plot, how these charts are made. I'll upload the last 2-3 videos, which last Thursday and before that I took. I'll upload those videos. You can go through this. So go through my video of how to use TradingView, and those 2 videos you will understand what it is if you're joining for the first time. Now, what you have to do is, you can see the charts, right? Yes, no? Can I have yes if you're able to see this ICICI Bank chart? Yes, okay. Now what we will do is, we will first put moving average. Okay. So what you have to do is go to indicators. See indicator, this in TradingView it is called FX, or if the drop down is coming as an indicator and strategies. Before I put an indicator, what is this line and point? This is nothing but a line graph, line chart what we used to draw in childhood. This is the closing price of 330, 330, 330, 330. It is plotted. The date is below here and price is here. So price versus date, x-axis and y-axis. This points are plotted. The closing price, whatever was the ICICI Bank closing price at the end of the day for every date. Like if I put my mouse here, you can see the date at the bottom, 16 September, and the price on the right side. That was the closing of ICICI. This is the closing of ICICI on 15 September. This is the closing of ICICI on 14th, 13th, 12th, 9th. So for last 15-20 years, it has plotted. So this some lines are drawn here. We have to make sense of it. Now, once we know what is this is a price movement. This is a line chart which we all studied in 6th or 7th standard, how to plot it. No rocket science in that. How to make sense out of that is also not a rocket science. So what we'll do is we'll go to indicators. See, I have taken a mouse here, FX in TradingView, indicators and strategies. Click on FX. Just type moving average. So you will get this moving average. Click on it once. So it will, one line has appeared here. Okay. A line has appeared here. This is a moving average. If you go here at the left hand side corner, by default it will show MA, moving average 9-day close. So go to the settings, change first. Let's start with 50, which is 50 is most famous moving average. So we'll start with 50. Then style, inputs you have to change. In the length you have to change 50. What do I mean to say 50 is, I'm telling the TradingView, please take 50 days closing price, add it up and divide by 50. Whatever value comes, you plot it here. This is the plot. It is done automatically. This line is the average of 50 days for calculated for every day. I'll just change the style. I'll make it, let's make it purple or something. Please excuse me if I'm not saying the name of the colors properly. Something purple. Okay. Okay. This is the most commonly used moving average. So what I have done is I have gone to moving average. I have changed it to 50-day moving average, and I have this line is plotted automatically. So what is the trading plan? Okay. For settings, there is a question. Settings, if you take your mouse to moving average, see, I have taken the mouse to the moving average. If I move here, this is the I. After that, this setting is there. Everyone can see the settings? Yes? Click on the setting. You will get this window. Then you go to input. Length is 50. You have to change the length to 50. Then you have to change the style. If you want to make it darker, just have a drop down, make it purple, and here the thickness you can increase. You can make it more and more thick. This one I prefer. Click here, type OK. This is the line. Okay, so how to trade? Very simple, very simple. If you are trading in ICICI Bank, like I said, I'm just playing a replay mode. Okay, those who want to will ask me a question, how did you start the replay mode? How did you? So look at it carefully. This is the replay mode button here on the top of the panel. Click on that. Take it to whichever date you want to cut the chart. So what will happen is, as soon as I click here, entire data of the right side will go away. So if I click here, okay, let me click one more side here. Okay, till here. Okay, so I'm just simulating it, the scenario for you. Let's say right now here, okay, now I'm showing you how to trade it. Okay, how to trade using 50-day moving average. Right now, as you understand the graph, this is the closing price here, and this is the moving average line. Is the closing price here, it is above the moving average or it is below the moving average? If you think it is above the moving average, type A. If you think it is below the moving average, type B. A, okay. Okay, B. Below the moving average, right? Correct, fantastic. So you see this purple line and this closing price, it is below. Now it is below. I know someone said type A, but definitely they know it is below. So this is below. This is the line. It is below. It is below here, right? Simplest trading strategy which was devised earlier is, if it crosses above, okay, if it crosses above the moving average, buy it. Okay, so now next day, the closing price, now has it gone above the moving average or below the moving average? Next day, now the closing price is, this is closing price, whether it is above the moving average or below the moving average. Above, right? So let's say every one of us, let's buy the share. So let's assume we bought the share, and let's draw a cross here to mark where we have purchased it. So let me go here. Everybody pay attention. I'm taking my mouse to the left hand side corner here. See, at the top, this cross is there. I'm taking this drop down here, and I have crosses written. So I click on that. I bring my mouse here and click here. And what happened? Why this cross is not coming? Okay, sorry, cross is here. Okay, this cross line is here, the second one. Second one, if you drop down here, this all options will open. Go to the cross line, select the cross, click on that, bring your mouse on the closing price and click here. Can you see a cross form? Let's assume we purchase the share at 369. So our strategy is simple. Buy the share as it crosses above the moving average. It was earlier here. Next day, the closing price crossed above the moving average. Immediately, we'll go to our trading platform and buy the share above the moving average. Everyone okay? Can I have yes from all of you if you have understood? I'm using the 50-day moving average. I'm using the 50-day moving average. I have put the 50-day moving average, and I'm showing the trading plan. Okay, so we have purchased the share at 369, and then we will. Okay. So sorry, it just went. I'll put back the replay. So okay, so we have purchased here. Okay, I'll answer the questions. SVM, I'll answer that. But it is a good practice. You have to get a hang of it. I'm showing the base, this base strategy. You have to refine going forward, definitely. But you can still use whatever I'm showing. Now it has closed above. Now, how long will I hold? So my three questions, right? When should I buy? So if I have bought as it crosses, so see, I'm answering three questions. When should I buy? Should I hold the share? If I have bought the share, should I keep that share with me? How long should I keep that share with me? When should I sell? These three questions we are answering. First question answered, when it crosses above the 50-day moving average, we bought. First question answered. Yes. Hello. Hello. Yes, no, yes, okay. Now, as long as, second question, I have ICICI Bank share, should I keep it or sell it away? So answer to second question is, keep it in your pocket as long as it is above 50-day moving average. Okay, so still it is above the moving average. How many of you agree this price is above the moving average, 50-day moving average? See, this close is above the 50-day. This is the 50-day moving average line. Yes. So second question, should I hold or sell? No, no, keep with you till it is above the 50-day moving average. Keep that share with you. So we will keep that share with us as long as it is above the 50-day moving average. Is it above? Is it still above? Is the close is still above the 50-day moving average? Yes. Okay. So we are still keeping it. Okay. So I'm running it. Okay. Is the close still above the 50-day moving average? Yes? No? Okay. So we are still keeping, right? So should I hold the share? Yes, please keep it. How long should I keep the share? As long as it is above the 50-day moving average. Okay. Has it gone below the 50-day moving average now? Yes. Is it below the 50? So it has crossed below the 50-day moving average now. Okay. So I'll put a cross here. I'll go here and I'll see for a cross. I'll take my mouse to the left-hand side corner, click a drop down here, go to the cross line, select it by clicking on the mouse, bring my mouse to this point, click it here. I'll get a cross here. If you see, by using the simple method, everyone bought here, everyone sold here, everyone is happy about it. How many of you are happy about it? Very much. Okay, great. Simple, right? Simple technique. So you have to fine tune. Now, if we are out, when should I buy? When it goes above the 50-day moving average. So you have to wait. Okay, now let us delete this line. Again, we are out of the share. We are out. Do we buy? No, we don't buy. Let it go above the 50-day moving average. As long as it is below 50-day moving average, we will not buy it. Okay. So it's still below the 50-day moving average. We are not buying it. 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 And it has gone. Has it gone above the 50-day moving average? Yes. Okay. Let's buy it. I have put a cross. Alt C if you press it, your Windows, if you put your mouse here and press Alt C also, you'll get the cross here. Again, we will be in the share as long as it is above the 50-day moving average. I'll just speed it up so that just tell me. Okay, now it has gone. See, it has gone here, right? So these are the small losses which you will have to incur. Okay, now it has, if we bought here, it has gone down here. Yes. Do you think we had a loss, small loss here? Yes, we bought here. When it went down, we sold. We will have some losses. It is part and parcel of stock market. So don't think that there is any perfect system which will give you profit all the time. See, we had a huge profit. Some part you have to give away, give back to the market also as a dakshina. Okay, it's okay to have some losses also. So it has given us losses. Okay, it has come up again. We will buy here. At this point, it has crossed above. See, as you develop expertise, you can know when to avoid. Right now, I'm showing you the base fundamental. Okay, so we had a huge profit, we had a small loss, which is part and parcel. You are in stock market, you have to accept small losses as a part and parcel of the game and be happy about it. Chalo, loss ho gaya, bahut badhiya hua, but I had a huge profit, right? Absolutely. Vandana is saying, I think important is to follow the process. Very right. Absolutely right. So we bought again. We will be above. We will be in the game as long as it is above the 50-day moving average. Okay, I'll speed up the thing. Okay. Okay. So that is today. So we are still in the game. Even if it closes below, and let's say if it closes below, will we have a profit here? How many of you think even if it closes down here, we will have a profit, right? So see, the moral of the story is two things. Moral of the story is, first, this is a system, this is a process, like Vandana very rightly defined, this is a process, and we have to follow the system. Buy when it goes above, sell when it comes down. Doing this, we will have big profits and small losses, right? It is always good to have small losses rather than big losses and small profits. Always go for a system which will give you big profits, small losses. This has given us a big, we bought here, we went from here to here. It was easy, right? We don't have to take tension on our head. Oh my God, when to sell, when to buy, it is going down and all like that. And all, everything, it went smoothly and we are able to ride the wave. So this was 50-day moving average. Okay. Sahil, I believe you joined little late. You can go through the video. I'll upload the video on YouTube. You are part of the financial fitness group. So you'll come to know that you can go through the link and watch it. I explained how I got it, right? Okay. So now this is 50-day moving average. Now many people prefer 200-day moving average. So what I will do is I will bring in the 200-day moving average. Okay. I'll bring the 200-day moving average. First, let me delete. Someone is saying IDFC First Bank. Well, let's bring IDFC First Bank. Okay. So moving average. Let's plot a moving average. Now, second most commonly used is 200-day moving average. You just, so I put in the moving average. See, I have two moving averages here. I go to the settings, I go to the inputs. Okay. Who asked? Okay, no, wait. Sahil, just check. See, I'll put it for you. I'm putting the 200. Just be with me. Okay, you have to go into the FX function. So you take your mouse to the FX function. Okay, and then type moving average. So you will get this, select this moving average. It's the simple one which is written. Don't select anything else. Click on it, close this. You will have by default 9 days. Take your mouse to the left here, moving average, slide it to settings, click on settings. Now we want 200. So just change it to 200. Style, go to style and make it black, make it darker. Okay, so okay, instead of that, let me take it as a green. Okay, So this is input is 200. Now see the difference between 50 and 200. This is 50. Okay. And this is 200. Everyone can see this? Can you see the difference? This is a 50-day moving average and this is 200. So this is slower to move, right? This will move slowly. 200 days moving average moves slowly. Agreed? People can observe the difference between 50 and 200. Can I have yes? If you are able to observe the difference, this is 50-day moving average, this is 200-day moving average. The 200-day moving average is usually used by long-term players, right? If you have a if you are a very good fundamental analyst or decent fundamental analyst, you have found a company which is decently doing, like it is good fundamentally, it goes, you want to have some technical as well, and if you are a long-term player, you can use 200. Usually long-term players use 200. Again, depending on what style of traders you are, I'm introducing everything. You can go through practice and you can choose whichever you want to use. Long-term people use normally 200. So they are very, very confident when it crosses about 200, they buy, they add more. The principle is same. The funda is same. Questions are three. When should I buy? Should I hold? When should I exit? Using 200 day, when it crossed here, if you would have bought here, right? Again, if I replay it, if you see, now this is the 200-day moving average. 50-day we would have bought here. Now the difference is, see, in 200-day, it is little slow, okay? It is little slow. So see here, if you see, let's start from here. The 50-day when we were doing, we bought it here, okay? Agreed? When we were doing our 50-day moving average crossover, it crossed here and we bought our share at 369. But this is 200-day moving average. It is slow to react. It is little slow to react. So it took some speed time to come here because it's an average of 200 days, right? 200 closing days price divided by 200. So it will move slowly like an elephant. It will move slowly. It will come. The advantage or disadvantage of this is that you have to decide on your own. We would be entering for 50-day here, we would have entered for 200-day moving average here, and we would enter this price here. So instead of entering at 369, we would have entered at 417. So that is a slight disadvantage between 50 and 200. What is the advantage of 200? If you see, after we entered, the price did not go below the 200, right? It has kept on. So since here 50-day moving average, we would have exited. Again, we have entered, then had a small loss. So whatever small bit of loss we had, or we had to do exit here, it was not to be done in 200 because 200 is still here, right? I'll repeat. When we were doing 50-day moving average, it crossed below. So we exited here. It crossed up here. After few days, we entered here. Again, it went down. We exited here. But if you see 200, once we entered here, we have not exited till now. It is still about 200-day moving average. We are still holding the share without any problem, without any exiting, or without having any loss. So we entered late, but we don't have to go through this repeated trading. What we have to go through 50-day moving average, and we are still holding. If you see, we are still holding with the help of 200-day moving average. So you see 50-day, we had an early entry, some exit, entry, some small losses because it went up and down, and still we are almost there. 200-day, we buy, and we are still in the trade till here, right? So there is a difference between 200 and 50. That's why I said people who are holding a good, fundamentally good share for a very long term, They normally use 200 days. They have fundamentally good stocks. They will hold it for long term. They will be in the share as long as it is above 50-day moving, 200-day moving average. Some people who like go basis the quarterly results, they will hold for 50-day moving average. See here also, when the markets crashed, if you are using the 50-day moving average, you would have exited here. See, the advantage of using moving averages, if you were using moving average, when the markets crashed, you would have exited here somewhere. You would have saved all this money. How many of you think can see if you would have exited 50-day moving average, you would have saved all this money if you are having that share. If let's say ICICI Bank, you would have sold here, bought here again, right? How many of you agree? Yes? Those who have suffered some losses, they can catch if Fatak say, okay, acha, I would have saved so much money. Honestly, I lost, yeah. So see again, I'm getting few questions which is okay 50 or 200. I'm giving you idea basis your own appetite. You use 200 or 50. Okay, that you have to use if you are a player who holds the share for a longer duration. Now see here, you will find that 200, if you are going for a fundamentally good stock, 200 is always better because you buy here and exit here. But if you buy in 50, it will give lots of ups and downs in 50. So you exit, enter multiple number of times. So you have to decide whether you want to use 50 or 200. If you are a fundamental, if you are choosing good quality stocks with a good growth rate, profit growth rate, and decent companies which have good, decent business in future, use 200-day moving average, stay in the share as long as it is above the 200-day moving average. If you are okay moving in and out multiple times, use 50-day moving average. So let's take, there was a requirement of IDFC first. Let's say IDFC First Bank. See, now it has gone down by both. If you are using 50-day moving average, you would enter somewhere here, exit here, enter here, exit here with some small loss, and you would have entered here right now using 50-day moving average. 200, enter here, exit here, still waiting whether to enter or not. So it will work on all good stocks. So the most important requirement is you have to select a good stock. What do you mean by good stock now? What is this confusion now? Suddenly from technical you are going to fundamental. No. I'm not jumping from here to there. Fundamentally means at least 20% year over year. It has to grow by sales profit. Sales growth has to be 20 years every year over year, and profit growth has to be 20% year over year. That is a decent stock. Okay. You cannot be wrong on that stock. Don't worry. Don't go in hunting for some stock which will give 10 times, 20 times. Every stock will give 10 times, 20 times. Just find a simple stock which is growing 20% year over year. Use this technique. You will be able to earn consistently. Fine. Now, coming to third. Now, some people are not very happy. Okay. So far, so good. Can I have yes from all of you? If it is good, interesting, it's a wow moment for you that yes, it is. Anybody having a wow moment? Acha, wow, the earning in stock market is so easy. Yes? Okay. Anyone with wow moment, type wow. If you have a wow moment, okay, this was good. This is simple. Huh? Why unnecessarily people are saying earning in stock market is difficult, earning in stock market? No, it is easy, right? It's not that tough. Tough is following the system. Systems are there. You can earn money. The toughest part is following one system. You have to have faith and follow one system. That is the toughest part. Rest is easy. Okay. So let's see. Now, let's take our ICICI Bank only first. Now, few people, they want to do quick trades. Okay, they want to enter, exit fast. So what they should use is, they want to earn money fast. fast. They like to enter exit. They want to do multiple entry and exit. So what I'm doing, I'm just changing the settings. Okay, so I'm changing the settings from 50 day. I'm going here, moving average. I'm changing the setting to okay. Let me add. Okay, I'll change this to 10. So this is 10-day moving average. So this is a 10-day moving average, right? So people who want to a 10-day, and I will okay, I'll keep 200 and I'll add 20 also here so that you can see some. Okay, so let me make it 20. Style, what color should I put? Let me keep it golden, little darker. Okay. So I made this purple as 10-day moving average. This is 20-day moving average. So what people do is same principle. They buy above the 20-day. Okay, I'll hide the 10-day and 200-day I will hide. So some people love to go in and out very fast, right? But so they will use 20-day moving averages. When it crosses, they will buy. They will crosses, they will sell. But personally, I don't like using so fast moving averages. If you're using moving averages, use 50 or 200. Crossovers, like crossover, someone was saying crossover, this is a crossover. So what they will do is whenever there is a crossover of 10, above 20, they will have some technique. Don't go for that. There are better techniques than moving average crossovers. These are not very efficient techniques of crossover. If you are using moving averages, my suggestion would be to use 50 and 200. If you are using moving averages, that's my recommendation. Use 50 or 200. But before using 50 and 200, find a stock which is at least having a sales growth of 20% for last 3 to 5 years and a profit growth of 20% for last 3 to 5 years. Then you are done. Find that company, put moving average 50 or 200, just use it. Moving across average crossovers is not a good not a very efficient technique. We have much better techniques than that, so I'm not covering that. Fine. Okay. Okay, so that's all for today. So if you have any questions, do ask me questions. Type in your name. I'll come to you one by one. So, okay, before I start questions, how many of you liked the session today? Can I have yes from all of you if you liked the session today? Yes, okay, great, great, thank you. Okay, thank you for that. Okay. Okay, this is one good question. I'll start with the question. So Pankaj is saying, what if shares has crossed both the moving average before and should we buy it or not? There are other techniques, right? Okay, so don't jump. There are other techniques to buy like RSI, there is ADX and all. I will cover subsequent days as we move forward. I'll be covering those. You can use those. But if it is nearby the moving average, you can still jump in. Right? Okay. So I'll allow you to unmute. Okay. Yeah, Jen. Yeah, Jen, go ahead, please.
Hi, Samir.
Hi.
I have been following your videos for a long time now, almost 2 months or so.
Oh, great.
Yet I have few questions which I want to share with all.
Yeah.
See, the moving average process or the method, it looks very nice and gives a lot of confidence. But I would like to know as well, what is the catch in that? Is there any catch if we still have the good fundamental stocks? We are